We had expected in September that the current CEO would lead one of the two new companies, specifically the one that is the grocery staples. They actually don't have official names yet, but that was a collection of the least profitable or less profitable food items there, including things like Lunchables and Oscar Mayer deli meats. The surprise came this morning that he is in fact not going to lead that company, and instead they are bringing in Steve Cahillane from Kellanova to lead the second company after the split has gone through that is being called the Global Taste Elevation Company. And that's going to have Heinz ketchup, Kraft mac and cheese, some of those beloved iconic products.
So that's the fast growing part of the company. And the other one is kind of the equivalent of CNN, TNT, and, the leave it behind assets that, are you're managing a decline in. What can you tell us about Steve Cahillane, the former Kellanova CEO? What is his approach, his philosophy?
Well, I just spoke with him, and he said that he's going to be focused on bringing organic growth to the company. We talked a little bit about focusing on some of the health and wellness trends that consumers are looking for, increasing offerings with protein, with fiber, with shorter ingredient lists, the so-called cleaner labels. Okay. So they'll definitely be leaning into that, it sounds like, a little bit more. He also led Kellogg through its split. The Kellogg company split into WK Kellogg and then Kellanova. Both of those companies were then separately acquired. I asked him if he thought that could be a path here, and he said it's hard to predict the future, so not ruling it out.
Just looking at this stock here, Kraft Heinz, compounded annual return over the last 5 years, -2% versus the consumer packaged good index up about 7-8%. Of course, the S&P up about 15%. So what's been the challenge for Kraft Heinz over the last number of years?
I mean, in general, the food companies are all struggling with this shift as consumers move towards healthier, less processed food. The company says that they just had too many brands and that splitting into two will help them focus on each component. I think that there is some analyst chatter that that's what companies say when they just need to, spin off some of their less profitable items, but they will tell you that they expect both companies will have better value when there's an ability to focus more on the condiments and boxed meals and then on some of the other foods.
Kristina, put this all into context for us. When Paul talks about how, this group has been kind of struggling overall, we also saw that with PepsiCo, with Coca-Cola. I mean, they have had to rethink their strategy completely.
Yeah, there's just been a lot of movement in the food industry right now. PepsiCo announced some pretty dramatic changes last week. They're going to reduce the number of products they sell by 20% and lower prices in some of their key brands as part of an agreement with activist investor Elliott Investment Management. Coke has a new CEO. I think Coke is in pretty solid shape. They've been doing their shares have been doing really well compared to some of the other business companies. But yeah, in general, the companies that I think are really tapping into this health and wellness interest in consumers are often the smaller startup brands, and the big companies are playing catch up not only with them, but some of the private label companies too that are really nimble and able to get some of these new products to market really fast.
Well, I know, you mentioned a private label. I know when I go to the ShopRite in Belmar, New Jersey, we buy a lot more private label than we ever used to. That's got to be a bummer for somebody like Kraft Heinz who spent my lifetime getting me to, brand up with Cheese Whiz or something. I mean, now I'm going store brand. That's going to be a problem.
I mean, consumers are definitely under pressure. They still need to buy food. And one of the things they do is turn to more affordable food. And often private label is an enticing option. Interestingly, we are seeing that more on the food side than on the beverage side.
Yeah, that's true.
Yeah, I guess people are willing to pay for beverage, but I mean, I think about, especially on the food side, it's that move towards protein. Everyone is obsessed with ingesting protein and making sure that whatever they are eating, if they are on Ozempic or something else, that it's going to add to their, their healthfulness rather than, kind of take away from it. What are these companies doing in terms of competing better against those startup brands? Are they looking to acquire them, for instance?
Yeah, for sure. In some cases, we saw PepsiCo acquire Poppi, the prebiotic soda brand this year, and Siete grain-free chips. So they are, in certain instances, acquiring some of these companies, and I expect we'll see more of that in 2026 also.